When we receive our bank statement at the end of the month, we have to reconcile this bank statement with the records in our books. That means the records that we've already done in the cash receipts and cash payments, because we want to see in the end if we recorded all the entries that the bank must still do in the bank reconciliation statement and the entries that we haven't done or we made mistakes in the cash receipts, general cash payments, whether the two balances will be the same. So step number 1 is compare the deposits in the cash receipts journal with the deposits in the bank statement. Now remember, what goes on the debit side of our bank is an asset. In their books it's a liability, so it will appear on the credit side. So if we look at the figures, now remember, look at the figures in your bank column. So there's a figure for 2,000 and there's one for 346. So we will tick it off with the 2,000 and the 346. Then there's a 2320 in both books. There's a 962 in both books. And there's a 3030 in both of them. Okay, so we've got one amount in the bank statement that's not in our books, and then we have one amount that they don't have. Then for step 2, we will take the cash payments journal and we will tick it off against the bank statement. So the first check here is 150. Then there's one for 768, so we paid with the EFT. Then there's one for 920 and 154. One for 1516 and 480. And then there's one for 630. And they don't have these two amounts, the one for 57 and the amount for 1480 doesn't appear on the bank statement. And then they've got a few things that don't appear in our book. So when we've done that, the third step that we will do is we will take all the unmarked items on the credit side of the bank statement that will represent deposits and go and record it into the cash receipts journal to indicate now we've done it already. So if I look on my bank statement, I see that there's a deposit of 350 Rand that did not appear in my books. So I will go in my cash receipts journal and I will record that 350 on the debit side, and you can see in the bank statement it's a direct deposit. So it's, for instance, for someone that paid rent, and we will indicate that that income is for rent income. I just want to show you the balances that they've got here. So the total in the cash receipts journal will be the total that we will start this additional cash receipts journal that we will do, and the amount that they already recorded is the amount that we will start with in our cash payments journal. Okay, then we will look at the amounts that don't appear on the cash payments journal, but they appeared in the payments. Okay, so if you look, there's an EFT for 205 Rand. And you can see that EFT was on the 24th of April. So it was for an amount the previous month that the bank did not record, so they recorded it now. That's why it won't appear on your cash payments journal. Don't go and record it again, because that date is the previous month. It indicates to me that I've already done it in the previous month. Okay, then there's a stop order for 120 Rand. So it means I have to record this stop order now, and I will show Sanlam 120 for insurance. Okay, then there's a EFT for 80 Rand, and we will show the EFT 80 Rand. So it's money that we paid back to a debtor because we owe them money. For instance, they paid the account in full and then they return goods, so we have to repay them. Okay, then there's amount for 28, 24 and 24. If you look, the 24 there is interest. So it means you keep interest separate, you never show it with the other amounts. So I will show the 24 Rand interest on overdraft. And then for the bank charges, I will take the 28 plus the 24, and I will show that my bank charges is 52 Rand. Don't combine those two in one figure because they appear separately on the bank statement and they will go to two different accounts. Bank charges is one cost expense account, interest on overdraft is a separate account. Okay, then if we look at any of the others, we see that all the other amounts was ticked off. So that means now we've recorded everything on the bank statement in my cash receipts and cash payments journal. I will add up, and the two totals that I have in the bank column at the end of the month, I will transfer and I will show that as my total receipts and my total payments. So I just book it over. And then I will show the balance that they gave me there at the beginning of the month, the 79. I will start my bank account with the 79 and I will just balance my account, and this is the amount that my bank account has at the end of the month. To do the bank reconciliation statement, we start where they stopped. So their last amount there was 4035. So I will start in my bank reconciliation statement with that 4035 that they ended. Then we will go and look, is there any entries in our books that was not ticked off? And if I look in my cash receipts, there was a deposit of 1317. So I will put that on the credit side. And if I look in my cash payments journal, I see there's an amount for 57 and 1480, and I will show that on the debit side of my bank recon. So the entries in my cash receipts journal will go on the credit side of the bank reconciliation. The entries that was not ticked off in the cash payments journal will go on the debit side. And then I will take this bank balance that I calculated, the 3815, and I will put it on the same side where it is in my bank. And when I add up, the two totals must be the same. What's very important is the balance in the bank statement will be the last balance in my bank statement. If it was a negative, it would have a debit balance. If it's a positive, it means I've got money in the bank, then it will be on the credit side. And my bank balance at the end, the amount that's brought down, that's what I put in there. The amounts between those two balances, we will record as the bank will record it in their books. That means deposits on the credit side and EFTs on the debit side.